venture, as you already have clients in the automobile industry who want this battery and want to acquire it to have for their 2027 models. And the cost of the will be measured as you gave an estimate of around $6.2 million, and therefore we do believe it is an asset. So for this reason, there will be no impact on either the financial statement or balance sheet, as it is already recorded accordingly. Now, for the loan that you took with venture. So, under IAS 32, financial instrument is a liability if there is a contractual obligation to deliver cash or another financial asset. So right now it is a liability in your books, and it is merged with all of your other loans, such as the loan you made yourself and all of your other liabilities. So it is an obligation for both to give cash to venture, and as we have no actual estimate of when they will convert their loan or if they ever will, we believe that it is more reliable to put it as a liability. However, if they do convert it, or if you believe they will convert it at some point, you can always make an adjustment to have some equity as part of this loan. So right now, there is no impact that needs to be recorded, as it is already accurate. Now, for the government grant. So according to IAS 20, it is either recorded using the capital approach or the income approach. So for the income approach, you essentially just record as revenue or deferred revenue and record it as time goes by. When it comes to the capital approach, you credit the asset it relates to so that the depreciation is lower, which then has the same effect, which is a lower expenses. So right now it is recognized in other revenue. However, we do believe that using the revenue approach as well, some of it should go in unearned revenue, as it will go by as the assets depreciate and not simply for the year when your costs were, you pay the money for it. So this means that the profit will go down as the liability will go up by $43 million for this year, and your profits will be a bit higher in the following years as your expenses will be lower because you will recognize the revenue that is right now unrecognized revenue. Now, for revenue recognition specifically, well, IFRS 15 states that it has to be an identifiable contract, that each party has rights and know what they are. There needs to be payment terms that are made. There needs to be commercial substance, and it is very probable that the amount that you are owed or the asset will be received. So right now, for the e-bikes that you had an order for, well, they were sold on January 15th. So right now, nothing was recorded for these, and it is a good thing because so there is an identifiable contract, which is that the company ordered these bikes, and everyone knows their own rights. For example, they can defer having the asset for when they actually use it. It has commercial substance because the company will get money, which for $50 million, which is also really important, and the consortium will also be recorded. However, the obligations you have for these bikes only go by on January. So for this, we do believe that the sale was recorded rightfully. However, there should be a debited cash and credit to unearned revenue in November when the cash is actually received. So for this, the assets and liabilities will be higher by $2.4 million at year end. Now, I will leave it to Faye to lead you through the question.
For sure. Thank you, Gab. So, starting with environmental sustainable governance, this is a really important asset of the financial reporting, and starting this year, you're going to be putting in more effort into external auditing of the ESG reports. So, going into the sustainability standards, why do we want to do it? It's to align with our core values on sustainability and eco-friendliness. We want to obtain more grants from the government. The only way to do that is by actually producing reports that will show how we're being sustainable in the environment, how we're impacting environmentally positive change. So the government's only going to give more funds if we show that change. 3, we want to establish ourselves as a reputable company in the EV industry. We've already started doing that with our EV development, but now with our new cobalt-free battery, we're positioned to be even better and coming out on top after these sustainability reports come out. So lastly, to appeal to customers' trending needs of environmental consciousness, more people are in need of environmental friendliness in terms of longevity. We want to make sure that the environment stays green for a very long time, and that really impacts our businesses. Now, compliance that we see in your business is that reports from external auditors will come back as showing non-compliance in these 3 areas. So, 1, we're not sourcing from Canadian suppliers fully. We're not going to approve suppliers when we need supply, and because of the stock shortages. And that really hurts our company in the long run because we're going to have to do more external auditing. We're going to have more external auditing costs in that case, and we also run the risk of losing our government grant. Second, we want to make sure that our batteries are safe for everybody. We would hate for us to lose on customers because of some safety issue that comes up in the future because we didn't use regulated and approved battery suppliers. And lastly, we want to make sure that our certificate from the government is actually approved so that we can go commercial with our cobalt-free batteries. So the impact on this is lost resources. Tax credits are going to be lost, but tax credits are really good to encourage more customers to go EV. Second, we want leadership and momentum in the EV market. We are in a growth phase. Why would we want to stop the momentum anytime soon just because we're not being compliant? Third, we want those government grants. Right now, we're getting a lot of money from the government, and we don't want that to stop either because it'll continue our funding for research and development. So a report that maybe the external auditor will come out with is our balanced scorecard. Starting with so there's 4 aspects of the balanced scorecard: customers, internal processes, financials, and learning and growth. I want to take you through this very briefly. The main customers that we're targeting are shareholders and EV car manufacturers. The objective with our customers in terms of growth is to penetrate more EV markets in Canada. And how we're going to measure that is having trusted manufacturers and aligning with those approved manufacturers to make sure that our EV business is trusted among more consumers and that we can penetrate more markets in this very saturated or growing saturated business. Going into our internal processes, strategic development will help us maintain growth and strengthen our supply chain. Our objective is 30% increase in local manufacturing as stated by our board of directors. What we're going to do is we're going to track local purchase orders and make sure that 30% or at least our target is being hit over the next year. And we're going to expand our local supplier list to make sure that that target is being reached. Next, objective to spend $50,000 annually on environmental training programs. So we're going to have to put in more money in hiring potentially background checked environmental specialists who have the knowledge to train other employees in this aspect and also make sure that our compliance and regulatory measures are being respected so that any reports coming back from our external auditor and any government grants can be and should be achieved, and so that we should be able to reach more. And lastly, learning and growth. Cobalt-free battery research and development will give both a competitive advantage in the industry. As stated before, cobalt-free batteries are new in the market, and what we want to do is produce a better value proposition than other competitors through this method. So going into our internal controls, what I wanted to talk to you about in terms of internal controls are assertion, quality management, and uncertain valuations. Right now, none of the inventory is really being valued as it should be according to IFRS. First of all, existence must be assured. Inventory counts are never done. It's important to do inventory counts at year end, at least to ensure that everything on your balance sheet is appropriate. Continuing as you are now, you're going to be either undervaluing or overvaluing your inventory, and it's hard to tell now because we haven't done a physical inventory count. Next, quality management. If you risk more rework costs and more audit costs and over time negative impact on profit for potential recall, you don't really want this. So inventory valuation is really uncertain, and continuing with this strategy, if you want to actually make sure that your audit is efficient, that you get a good audit opinion, and that your balance sheet is well recognized in terms of the value that you're putting on it, you want to make sure that we're doing proper floor to ceiling, ceiling to floor inventory checks, and that staff on site know how to do that safely and accurately. Talking about CFO Inc., briefly I'm going to mention that there exists an employee and of an employee versus contractor relationship that needs to be verified according to IFRS. When this exists, we need to make sure that anybody who's working for the company, if they're labeled as a contractor, are making sure that their relationship is not one that is identified as an employee. So there's criteria to this, but what we've determined is that the small business deduction will not be allowed for Mr. CFO Inc. because you're going to be imposed on a personal, you're going to be labeled as a personal service business. It's a very good strategy in theory, but the government is aware of this and they want to make sure that they're getting the most taxes, that you're not getting away with small business deduction of 9%, and they're going to tax you higher. So the result is you're going to get no tax savings from this, and your expenses won't be deductible. So there is actually no benefit to being a contractor. So what we recommend, either if you want to be a contractor, you're going to have to provide more business externally, you will not have salary, you will not be paid the same salary as you were. And in terms of that, if you want to continue providing your businesses and deducting your expenses, there is a $30,000 tax threshold for GST QST. You're going to have to start collecting and remitting if above that threshold. And on top of that, that might negatively impact cash flow in the future, as maybe you're not really used to collecting taxes from customers. So handing it back to Ari to summarize what we've talked about here.
Thank you, Faith. So, we talked about a lot of things, a lot of heavy stuff, but it's not a lot of stuff that are hard to control or hard to change. These are minute things that you can change and it can make your business run a lot smoother, a lot better, give a lot more opportunities for, let's say, a proper IPO, having proper valuations, having more investors, ensuring that you get proper government grants as well, making sure that your accounting makes sense. The general topics for, again, internal controls, ESG, CFO Inc. and financial reporting. And the big question here is, what's the actual overall impact that this is going to have? What are the impacts that this is going to have in terms of, like, when we tell you to implement these strategies, these changes? We saw in some cases the balance sheet will change by a certain amount, but the net number is still just going to be the same. There's not going to be, let's say, a huge change. It's going to be a $2.4 million change. But in terms of profitability, when you make the adjustment for the government grant, you'll actually end up with a net loss of $39,301. This number is actually in thousands, which is why it looks that low. So this is why we wanted to stress the importance of exactly making sure that everything is done compliantly and is done properly. So, thank you for your attention, and we'll now open the floor to questions.
Thank you for the presentation. We have now the 5-minute question period.
I've got one. When you were speaking about the convertible note, well, the loan in the liabilities, you mentioned that in the future we assess that they might convert to shares that we can adjust. That adjustment would it be from the year that we assess this possibility that they convert, or do I have to change the past year as well?
So as it is an estimate, you can only go forward. If we're in error in actually making a number, then you would have to go back and make a change estimate and therefore you don't need to go back.
Okay, thank you.
And beside the inventory count, did you do you have any other control weakness or recommendation that?
Yeah, for sure. So a lot of weakness comes from the lack of oversight. Evan is not always present to be able to sign off on certain inventory counts and purchase order receipts. So what's done is normally it's signed off in a way that we wouldn't recommend as accountants putting in received orders into inventory and then recording it as orders purchased rather than actual inventory orders received. What you're losing out is two things from there. One, you're losing out on actually being able to value the inventory properly. So somebody either needs to train somebody other than Evan to be able to sign off on those properly, and also quality management if nobody's checking the quality and there's damaged goods in there, either an entire pallet worth $40,000 or just a few items, you really run the risk of losing out customers, damaging your reputation. So yes, there's a lot of weakness in that area, and it is significant to the materiality of your balance statement.
I was wondering, you mentioned at some point that you would not comply to the sustainability standard. If ever you had to design a procedure to validate it, whether you would or not, what would you design as a procedure for the different standards that were listed by the standards that were listed in the case?
What kind of procedure would we design to make sure that we comply with it?
Yeah, or validate that we would not comply.
So to validate that we would not comply, so the standards that were there listed, $30,000 in, 30% increase in local business and $50,000 spend. So there's a number of ways that we can combat this, potentially going into having objectives, measurements, and risk and mitigation sort of plan by implementing, sort of thinking on the fly here, so sort of implementing a budget, a budget to where are we going to actually take these $50,000 from and put it into a allocation in terms of, well, first training costs, who do we need to train? Second, when are we going to train and for how long are we going to train them? So an implementation strategy, maybe over the next 3, 4, 5, 6, 7, 10 years. Long-term strategy, we'll start short, medium, long. And having that is, it'll take a little bit of time to talk with the team about, but we can start that way and we'll work with the budget continuing forward. Each year, if we want to spend $50,000, that's $50,000 hit to our expenses in operational costs that would be put towards, let's say, research and development. So we kind of have to manage budget and long-term strategy in this plan. In terms of the 30% growth, I would say maybe making stronger bonds with suppliers and strengthening that supply chain by trying to combat these stockage, the outstocks that we're facing. It's really a difficult challenge that everybody in the industry is facing right now. So what I would say is make sure that the communication is really good. Secure maybe 5 new suppliers in the industry that can supply the same cobalt, lithium that we're looking at, and see if maybe during busier seasons or on off seasons, we can try to secure more in our inventory and then secure our lead time in busier seasons to make sure that we're fulfilling orders in time. If that's a good strategy, then we can continue that way.
15 seconds. It's okay.
Thank you very much.
Okay, perfect. Congratulations, you can quit. You can leave the cell. Out of respect for the other academic case being present in the area, I ask you to remain silent until you arrive in the appropriate area. Thank you.
Thank you.
objectives for developing local economy. So that's the objective that we determined for your company that you already know.
So for the reporting issues, we have our government grants that we have received from the Quebec government. We have R&D expenditures such as capitalization issues. We have deferred revenues from when we had electronic bikes that we were unaware, or we were aware, but how we will report it for either this year end or the next year end. And then we also have convertible shares where we got a loan from a venture capital.
So, in touch with the government grant, there was an agreement, or in the agreement, it was stipulated that the company needed to spend at least 40% of the $50 million received as of the end of the year 2024. So, from the three branches we see, there's $45 million spent on the plant, $15 million on equipment for the plant, as well as $7 million in startup costs that were incurred to put the plant in the right track. So we can see that the sum is above 50 million, and so they respect the agreement as said in the contract of the 40%. In terms of recognition of this amount, as per IFRS, there are two options. So usually in this context, you need to associate the revenues with the expenses. So when expenses are incurred, then the revenues will be classified in the income statement the year that the expenses are incurred. And so as we see, over 50 million has been spent this year. They will be able to present it as a revenue in that year, and all this to remain in agreement with the government of Quebec.
So now let's move on into the R&D expenditures. So we've made a little timeline so that we can see like each expenditures for R&D. So first we have in here the implementation of the intangible assets and to go on sale. So this is a very important aspect of the R&D expenditures. So now after we're going to have the intention to complete and sell the intangible assets that we already had in the fiscal year. Also we'll have the ability, then we're going to have, since we're gonna have the intention to complete and sell the intangible assets, we're gonna have the ability to sell them after that. Then we're gonna have an economic benefit from the intangible assets. After that, we're gonna have resources to complete development of those intangible assets. And finally, we'll have an ability to measure expenses. So all this R&D expenditures are for IS 38.
So for the deferred revenues, we are talking about the partnership that we have with e-bikes. So we received cash after year end, or we received cash after year end in January for this agreement, and then there was also goods delivered undelivered because of supply chain issues that e-bikes were facing shortages. So they had to push the delivery after year end. So this making another issue where we had goods undelivered. There was also, with correlation to goods undelivered, the inventories were held after due to these shortages of batteries. And then for the accounting treatments, we would want to have this deferred to next year end, because since the deliveries weren't made to this year end, we're going to be reporting it for the next year end and going onwards with that.
Alright, now to touch on the convertible shares. So, as you may know, a venture capitalist fund has decided to give $3.2 million to Bolt to help finance future projects and whatnot. So, we analyzed this contract and this amount, and we see that at year end 2024, the venture capital fund has not expressed a desire to start converting some of the capital from the loan into common shares. In addition, we have not been provided with repayment terms, so it is difficult for us to determine an exact amount at year end 2024 for any possible conversions they may want. And so this leaves us in the big picture at year end 2024. We believe that there should be no amount
classified as additional equity in common shares at year end, simply because the client has not expressed significant desire to start converting shares, as this can also be a very difficult legal process. They will probably just want to start this process in future years.
Now let's jump on into the operational issues. So we determine controls, weaknesses, and recommendations. So we know that there is warehouse inspections in the factory. So it's a very important control that we will have to take into consideration, because in the warehouse there has been some issues entering information throughout the suppliers. So it is very important to keep that in mind. Another important weakness that we've determined is the project numbers is not provided. So we will have to determine that, because it is very important in the operational issues determination. So we'll have to take that also into consideration. We'll have to also talk about the incorrect orders, because during the operational day-to-day into like the day-to-day operations, we will have incorrect orders. So we'll have to take that also into consideration into the weaknesses. Then we have payments for incorrect. So we'll have also to take that into consideration, because we cannot have payments about incorrect information. So we'll have to take that also into consideration. We'll have also inventory management. So we know that the inventory now for bolts is not really as efficient as possible. So we'll have to take that also into account and state it as a weakness, so that we can provide a recommendation after. Also, we have the over and underestimation in the operation issues. And finally, we have the lithium shortage. So it is a very important aspect, because we know that in the production of bolts battery, we use cobalt and lithium. And since there is a lithium shortage, we'll have to take that really into consideration as a weakness. And finally, for recommendations, we'll have to improve expected inspections for order, especially that it is very important to have the right purchase orders, etc. So it is very important to put in more inspections into the orders. Also, we will have to implement inventory accounts, so we will have really a day-to-day, and we can also keep on track of the inventory accounts that we have into our factories. We also have the project numbers for every order. So we also said before that there is a weakness and there is a problem determining the numbers of projects. So we'll have to really count every order for each project. And finally, we'll have to improve the inventory management in general by implementing best practices for that.
So in starting with the compliance report. So as of 2024, there has been no compliance report completed by the company in prior years or this year, but it has been brought forward that the company, as it is reporting under IFRS, and it is looking to put forward an initial public offering. This is something that will need to be put in place in future years. So you guys had the question for us: what kind of report would have to be produced? What kind of audit or work would be done to for this report from an external auditor's point of view? We have said that a general environmental audit would be done by them, as well as bringing in an expert with expertise on the environmental domain, as well as the lithium and cobalt battery domain. So this will help validate anything that may be unclear for an external auditor. So in terms of the advisory board that is required for this compliance report, Bolt will need to put this advisory board into place, and we believe that this external auditor would want to see the meeting notes to see what has been discussed, what has been approved for future years. Next up, with the SCC, we could obtain an approved supplier list to match what the company has and who they've been dealing with. Next up, we could do work, the external auditor could do work on the local materials suppliers to see if this is really being bought and brought in by local manufacturers. Next up, as the new facility in McVillage is being built, future facilities will need to be certified for sustainability measures. So ensure that we bring in experts, or that external auditors bring in experts to validate these buildings. And same goes for training expenses for environmental protection. The external auditors could do some work looking over invoices to assure that the compliance is all good after the end of the year.
Let's talk about the ESG scopes. So we've determined the environmental, social, and governance scopes. So for the environmental, we know that an important strategy that we can implement is that reduce our carbon emissions. So we will have to state that clearly and say that we're gonna try our best to limit the carbon emissions. Also, another thing is that we know that you want to develop sustainable development investments, so we'll have to really work on that to have more sustainable development investments into the company. Another important factor is that, for example, we can, for all the batteries, we can propose a disposal, for example, disposal service. Instead of throwing them, we can really propose a very environmental free strategy by using disposable services for all batteries that we had. And finally, for example, the investors could ask for their capital to be invested in sustainable practices. So we'll have to take that also into consideration because it is very important. More and more, the investors want to see that their capital is being invested in environmental gentle strategies. Let's move on to the social.
Yeah, so for the social aspect, obviously it's been mentioned that work with ethical suppliers is very important for the company. This has been put forward as as something very important for them. So we need to work with the SEC to ensure that we have an up-to-date list of ethical suppliers that we can source lithium and cobalt from for our future battery production. Same goes with locally sourced materials. As a lot of entrepreneurs are popping up on the scene, and a lot of small businesses are being created, it'll be important for us to put ourselves out there and to make our name known in the community so that we can acquire these relationships with these local businesses for these local materials.
And now let's move on into the last scope is the government. So we know that you want to implement an advisory board for environmental matters strategy. So it is very important to start the meeting, to start the advisory board with the 7 people so that they can talk about all the ESG aspects, so the environmental strategies and the social strategies, and so that they can provide recommendations and best practices for those strategies in environmental, social, and governance.
And another topic we want to touch on, my colleague would like to speak about CFO Inc.
So for CFO Inc., we are proposed with the idea and the question that is the CFO Inc. Saving tax reductions and expense limiting, having proper deductions. So what we notice is CFO is a PSC, it's a professional services enterprise or entity, sorry, and they need to register for GST and QST as long as they make more than $30,000, and which in this instance he is. So he will have to register for QST and GST, and then we also want to go over the expense deduction. So since they're a small business, they would want to be qualifying for these tax deductions and the SPDs. So as mentioned in the footnote, but there will not be many tax deductions with this case because of the high earnings of CFO Inc. And it's kind of like a fractional CFO situation where we have here, as well as and finally we have the SPD and the GTRs, the general tax reductions and the small business deductions. Here we notice that he's not going to be able to qualify because there is just not enough, or there's just too much earnings, and it's just a big whole mess in that situation where it would be a bit better for him to be employee rather than contractor. So in summary, to summarize this whole thing, we have reporting issues that are vastly different, and like the operational issues such as the lithium batteries and the electric bike
Now, for future steps, we have laid out the short, medium, and long-term steps for you. So, as you have submitted an application to certify the new battery, this will be something to finalize in the short term to start production right away. We also believe it'd be important to implement the internal control recommendations that we put forward for you. This will help the internal controls, especially for the inventories, be much more rigorous. It'll help the company keep better control over that aspect. Next up, for the medium term, an external auditor will be needed to complete the sustainability compliance report. If it's not possible for 2024, it will be very important to do it for 2025. Next up, the development of the new battery. Like I said, there may be some additional costs for testing to make sure it is good to go on the market, so this will have to be done. And finally, long term, this is very important. As you have expressed a desire to make that initial public offering, there needs to be a better understanding of the implications of this action. Going on the market, especially as a young company, is a very big risk, so we believe that meeting with a consulting firm to understand every aspect of an IPO is a very important future step for the company.
So we started this presentation by saying that numbers tell a story, and after this deep dive into Bolt's company, we really understood that they represent opportunities, challenges, and strategic decisions. And we think after this deep dive that the company has a great and will have a great and stronger financial future. So thank you so much for your attention, and if you have any questions, please let us know.
Perfect. Thank you. We are now at the 5-minute question period.
Could you go back to the discussion on the criteria for the different costs? So you presented the relevant criteria in order to take a conclusion on this issue. How would you apply the situation to those criteria to determine whether or not the cost could be capitalized or not?
I think it's a very good question. We'll have to try, for example, we'll have to test them to test the product to see if we can capitalize or not. So it is very important for R&D expenditures to really test the batteries to know if we can really capitalize the R&D expenditures. So
For example,
Yeah.
if we take a criteria C, ability to sell the intangible assets, here it would be the intangible asset would be the cost at the expense for the lithium-free battery. Sorry. If we take the criteria C, how do you think does both meet this criteria or not? Will they be able to sell the battery? What information can we use to determine whether this criteria is met or not?
I think,
Yeah, I can take over this question. So, basically, this was in compliance with the IAS 38. So, essentially what they're using is the CPA handbook over this rule, which is IAS 38. And what they need to do is basically assess their own product, such as the cobalt-free battery. And by that, they need to be able to understand these topics. And with that, essentially, they'll be able to capitalize the expenses as per these, as long as they fit the criteria
orders that are not with the right amounts. So that's a very important weakness, and we'll have to find the. I think the right approach is that we could work with the suppliers, and so that they could give us best practice. We could give them best practices so that we can work together to have better, payments and better invoices into the payments.
Just to piggyback on that point, it's kind of, it ties into warehouse inspections because when we pay for a product and we get less batteries, it kind of ties into the inspections of the quality of the inspections of the battery that we're doing. And essentially, we just want to have more rigid controls, and this would then essentially improve our work inspections and our inventory management and all, basically all in one, which
Can you think of any specific way that I can improve the inspection of the orders?
I think in this aspect, it was mentioned that a clerk is often handling reception of goods when Evan is out of town.
Yeah.
So obviously this can happen. This clerk may have no knowledge as to what to expect when receiving a product. And so these orders received when Evan is not there should be put aside. It should be put on hold. When Evan is back, he can deal with them, because if you're getting inconsistencies from your suppliers, there's an issue. You need to change suppliers, or you need to have a talk with the supplier. And if you're bringing inventories into your warehouse and saying that they're received as per the invoice, there may be errors that are not flagged. And so this is something that could affect financially. It's going to affect the quality of the goods received. So it would be important for maybe more individuals that are trained in that aspect to be hired, or for Evan to simply have to look over all the goods received.
Thank you. The question period is over. Thank you. Congratulations. You can leave the room. Please maintain the silence until you arrive in the appropriate area. Thank you.
Thank you.
Thank you.